So my prediction is right, and Trump has indeed won the election. Hang on, otherwise you guys will laugh at me. After his win, everything has been going to the moon. The US stock market is up, the crypto market is up. I bet Elon Musk is super happy now. So with the election over, let's talk about what a Trump win means not just for the US stock market, but also for the US economy and its impact on global markets. Then at the end, I will also be sharing how I will be investing going forward. But before I start, do join my 10,000 members Telegram chat group to discuss or ask any questions that you might have. First up, now that the election is over, there's less uncertainty now. And based on historical data, we can expect the stock market to continue going up all the way till Christmas time. Ho ho ho. Not just that, we might also see 2 more interest rate cuts this year, which again is good news for the stock market. But how will this win affect the stock markets over the next few years? So it's important to note that this time round, it isn't just Trump who won, but also the Republican Party who managed to gain power in the Congress. Basically, a clean sweep. This means that the Republican Party will be able to get more things done in their favor, which also means challenging the status quo. Because of that, we are likely to see more uncertainty and more volatility over these coming few years, and possibly lower returns than if we have gotten a divided Congress. But nevertheless, barring any black swan events, the market is expected to continue going up. Now, there are a few industries that will especially benefit from the Trump administration. First, Trump wants to drill more oil, which means the energy sector will benefit from this. Second, he wants to increase his defense spending, which will benefit companies like Lockheed Martin, RTS Corp, and possibly even Palantir. Third, he also wants to deregulate Wall Street and the financial sector, so we will see financial companies like banks benefiting from this. Fourth, his tax deduction policies will benefit the real estate and construction sector. However, as we will see later, his tariffs policy will also lead to higher interest rates, which will negatively affect the real estate sector. Finally, his stance on American First will boost domestic production and consumption, which will benefit the manufacturing and industrial policy. However, with that being said, Trump's win will also be somewhat of a bad news for the stock market. That's because he plans to impose 10% tariffs on all imports and a whopping 60% tariffs on Chinese imports. While this can help to protect domestic companies from competition, it can also raise the inflation rate. For example, one study found that under the Trump administration, inflation could rise anywhere between 4 to 7% from the baseline by 2026. As a result, according to Allianz, this will prompt the Fed to raise rates back up in order to keep inflation under control. And indeed, in anticipation of this, the 10-year US Treasury yield has gone back up from the low of 3.6% to 4.45% now. This, of course, is good news for the savers, because it means our bank interest rates, money market funds, and government bonds might just see higher yields for a while longer. But on the flip side, this is bad for the companies, because higher interest rates means higher borrowing costs. So companies that heavily rely on debt to fund their business operations will suffer, such as REITs and small cap stocks. It has been 2 months since I started doing weekly dollar cost averaging in the QQQ via Moomoo Singapore's regular savings plan. So how did I do? Since QQQ has been pretty flat throughout this period, my unrealized profit is just under 1%. Yes, I know this sounds little, but it's working as intended. Dollar cost averaging lets me reduce the impact of market volatility by spreading my investments over time. But more importantly, it encourages a disciplined approach to investing so that I get to invest consistently without having to worry about market timing. Using Moomoo Singapore's RSP calculator, did you know that if you had just invested consistently every week on VOO over the past 1 year, you would have gotten around 10% return? And here's how easy it is to set up RSP. First, open up the stock that you want to invest in, tap on the 3 dots on the bottom right, then tap RSP. You can ask Moomoo Singapore to deduct the funds straight from your bank account, and it will even perform automatic currency conversion before buying your stock. Then choose your investment amount and investment frequency. New users will get to earn up to $1,034 worth of welcome rewards, Plus, both new and existing users will get to enjoy zero commission for Hong Kong stock trading for 30 days, zero commission on US stocks, as well as zero commission trades on US options every month for up to 100 contracts. For more details of the promotions, do refer to the link promotion page in the description below. Next, we could expect higher fiscal tensions. That's because Trump will be inheriting a bigger budget gap this time round as compared to his previous term. And with his promises of slashing taxes and increased spending, this would raise the US debt level even further. While this would not lead to a government default, because the debt is in their own currency, it can certainly restrict the US ability to respond effectively to future economic downturns. Third, when the US increases tariffs on China, China is likely to retaliate back, which means more trade wars. Both sides will certainly be affected. But according to UBS, China would end up a lot worse off, with their growth rate dropping by half. So if you are investing in the Chinese markets, this is something that you want to be wary about. Fourth, we might see an end to the Russian-Ukraine war. That's because not too long ago, the Republican Party blocked aid to Ukraine for more than 9 months, causing Ukraine to run out of budget and lose some of their most capable fighters. And this time, with Trump being in charge, we might see him withdrawing support for Ukraine entirely. Though, in return, one small good news is that he did mention that he will work to get good deals for both sides. And for better or for worse, the end of this war is good news for the stock market, as this would mean lower uncertainty and lower commodity prices. Which brings us to the question of, how should I invest now? One question that I kept getting is, given that stocks have already gone up by so much, is it now too late to buy? Obviously, no one can predict the future, but here's what I think. This rally is quite strong, and it can definitely go up a little more. However, just be aware that because of this huge rally, many stocks are in or nearing the overbought level, especially stocks like Tesla and Palantir. So, while it can go up further, there's a higher likelihood that we will see a pullback soon. That's why my advice has always been the same throughout. Rather than trying to FOMO into stocks, it's a lot better to spread your investments by dollar cost averaging over time. That way, you get to buy in whether it's at the lows or highs. Market up, you buy. Market down, you cry a bit, then you buy more. However, if you still want to join in the rally, I would say it's certainly okay to FOMO invest a bit, but definitely avoid going all in right now, especially at overbought levels. Meanwhile, if you are doing stock picking, pay attention to where the intrinsic value is, because you don't want to overpay too much for your investments. But I don't know how to calculate the intrinsic value. No worries, because you can use websites like Guru Focus and FinCheck to roughly estimate the intrinsic value of the company. Personally, I've stopped trying to do stock picking because I stuck at that. That's why I've changed my strategy to just investing in this ETF called SCSG, which focuses on US large cap growth companies. But why not Triple Q instead? That's because Triple Q limits its holdings to just the Nasdaq index, which may miss out on certain good stocks, such as Visa and Eli Lilly and Co., both of which are listed on the New York Stock Exchange. At the same time, Triple Q is too concentrated for my liking. For more analysis on why I went for SCSG, do check out this video here. But in short, Trump's win doesn't affect my investing strategy at all, as I'll be investing consistently throughout. Anyway, that's all for this video. Hopefully you found it useful. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.